Hello, everybody, and welcome to more accounting questions. We love accounting questions because this is how we're going to go through and learn all about them. So ahead, my disclaimer and copyright notice is that the information and opinions in this presentation are those of myself only and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. A presentation is for uh, sleep purposes, educational purposes only, and does not constitute any legal or accounting advice whatsoever. The presentation is copyright 2008 to 2026 by Bennett Tchaikovsky. All rights are reserved. If I make references to other things, that belongs to those third parties. So coming over here to our final question, basically for this area, is we've got Pinnacle Industries is a publicly traded manufacturing company. On January 1st, 2024, before the books were closed, Pinnacle's management and accountants made the following two determinations. So effective January 1st, 2024, Pinnacle decided to change its inventory costing method from weighted average cost to FIFO. Management believes that the FIFO method provides a more appropriate measure of inventory cost of goods given the current economic environment of rising prices. Net income under each method is right over here. And then we get into the inventory balances. So our inventory balances are basically the difference between these two right here. I will go in more into, kind of seeing why basically where is this difference really coming from. And if we kind of look at this really where it's coming from, it's like if we look at this here, we got 180,000. And if I add up all of these different matters here, this is also going to be at 180,000. So then we also have this other thing that happened, which is on January 1st, 2021, we purchased a piece of equipment for $480,000. The equipment was erroneously expensed in full during 2021. It was debited to repairs and maintenance expense. Equipment should have been capitalized and depreciated on a straight line basis over 8 years with zero salvage value. The error was discovered on December 31st, 2024, before the books were closed. Wow, okay. So now we have over here, the error was, okay, so then we've got information over here on retained earnings, and then ignore all income tax effects. The earliest period that basically was presented was January 1st, 2022. So we're being asked over here to record the journal entry, record the change in accounting principle, and then the correcting journal entry to record the error correction of what was previously expensed, and then the journal entry to record the depreciation for the equipment. Okay, so I'm going to go ahead and do this part first. So let's go ahead and do this first. So for the journal entries, okay, so as of 12/31/24, we are going from weighted average to FIFO. Okay, so we're going to FIFO. So effectively, I'm increasing my inventory by 220,000. So I'm going to be debiting inventory for 220,000. Again, this is the difference between my 460 less the 280. So right over here, and I just screwed that up. Hold on. Good. Yeah, I just screwed that up. So let me go ahead and do this right here. So this is going to be 460 minus 280 or 180,000, which represents the differences we got over here between weighted average and FIFO. Okay, so this is the old and this is the new. So I'm increasing my inventory over here by $180,000. Because I'm increasing my inventory, the balance is going to go to retained earnings over here at 180,000 to record the effect of a change in accounting principle. Okay, now for the error on the equipment, let's take a look at this. On 1/1/21, I basically bought equipment and I essentially took $480,000 worth of expense. So I debited repairs and maintenance expense and I credited equipment. However, what I should have done is I should have taken, because this equipment was going to be lasting for 8 years with zero salvage value, the amount I should have taken is going to be 60,000 each year. Okay, there's no partial periods on this for year one, but I should have been going through and doing this for each year. So what I need to do is I need to basically recreate this equipment. So what I'm going to go ahead and do is what I should have on my books is I should have equipment of 480,000. What I should also though have is I should have taken accumulated depreciation on this equipment. My accumulated depreciation on this equipment should have been at 60,000 per year. I should have taken 60,000 in 2021. I should have taken 60,000 in 22, and I should have taken 60,000 in 2023. So by the end of these 3 years, I should have accumulated depreciation by the end of 2023 of 180,000. So to basically to bring this equipment back to life, I'm going to go ahead and debit equipment. I'm going to credit accumulated depreciation on the equipment. My equipment is going to be debited over here for 480,000. I'm going to credit accumulated depreciation for 180. Now, what's the difference going to be? It's going to be an adjustment to retained earnings. Okay, remember, this is a 1/1/24. A statement of retained earnings are going to be looking different, but at this point, this is going to be a balance here of 300,000 to correctly record equipment on our books. Okay. Now, the next thing I also have to go through and do is to record depreciation expense as of 12/31/24. This is going to be a debit to depreciation expense, crediting accumulated depreciation on the equipment. And this is going to be at 60,000 because that's the amount of depreciation I should be taking every single year. And this is okay for this to go on to my income statement. Okay. Now, what I'm ready to kind of go through and now try to take on is we're going to go ahead now and take a look at these we need to come up with some revised statements of retained earnings. Okay, so how are we going to go through and do this? Well, we're going to go look at our earliest period. We're going to basically start over here is on January 1st, 2022. So what I'm going to go ahead and do is I'm going to basically start at 2022. My beginning retained earnings was at, prior to adjustments, was at 1.8 million. Now, I have over here basically two different adjustments relating to the change in accounting principle. Okay, so I've got the change in accounting principle over here for 2020, change in accounting principle for 2021. This would be increasing my retained earnings over here by 30,000 for 2020 and then by 40,000. But I also have another adjustment, right? What's my other adjustment? Well, in 2021, I made a pretty big mistake, right? So over here, I effectively, in this first year, I basically expensed 480,000. I should have only expensed 60,000. So effectively, I overexpensed the depreciation by 420,000. I love that number. So I can't help myself. Over depreciated by 420,000 prior, because again, I'm doing this as of 2022, right? This is my beginning retained earnings as of 1/1/22. So my depreciation error is going to also be adding back 420,000. Okay, so again, I'm adding this back because I took out too much depreciation. So my beginning retained earnings as restated. Now, again, we made this a lot easier because we're not including any type of income tax effects. Okay, exciting. We're also going to say up here as restated. Okay, so my beginning retained earnings as restated is my beginning retained earnings plus my change in accounting principle for these two periods plus the depreciation error, 2,290,000. Just give me one moment. Okay, now let's go ahead and look at our current situation. Okay, so my net income under FIFO, okay, for 2022 is going to be 480,000. Again, I'm showing this as what it's going to be under FIFO. And in fact, if I want to make my life a little bit easier, as restated, and then 2024, what I'll go ahead and do is just put in these new numbers now. So my new net income was 480, then it was 520, and then it was 600,000. Okay. However, I also have to make adjustments. What's my other adjustment? Well, I added all this back because I over depreciated. So I need to make sure that I'm recording the right amount of depreciation every year. So over here, my depreciation expense is going to be at 60,000 each year. Okay. So I'm basically recording that depreciation expense, 60,000 each year. Why is that? Well, again, with that error, I wrote this all out at once. So I restored it, right? So now, like that first year, I now have an asset on my books now sitting at around 420,000. I still have to depreciate it. So I need to go through and depreciate it. Remember, this FIFO, whenever you see the net income, it's not going to be affected for the error that was gone through and found unless otherwise said so. Now, what I'm going to go ahead and do is I'm going to go ahead and now deduct my dividends, or we can call this net income as adjusted. And what I can also do to make this a little bit easier for us to kind of follow along is let's go ahead and move these guys over a little bit and kind of show us where we're getting our numbers from. Okay, so we'll put this here, and then we'll put our net income as adjusted. We'll move this over by a column. Okay. Okay. So remember, I'm not putting this as restated because this is basically the new period. Okay. So now the net income as adjusted is 420,000 less dividends. So my dividends were 100,000 for 2022, 150,000 for 2023, and then 200,000 for 2024. Okay. Okay, so my ending retained earnings is going to be my beginning retained earnings as restated, plus my net income as adjusted, less my dividends. It's going to give me my ending retained earnings. My ending retained earnings becomes my beginning for the following period. So now my ending retained earnings for 2023 is going to basically be my beginning, plus my net income as adjusted, less any kind of dividends. My ending retained earnings then becomes my beginning for the following period. So then over here, my ending is my beginning, plus my net income as adjusted, less any kind of dividends. And just give me one moment to make sure I did not lead you. Okay. So this is kind of where we're going through, and this is how we're going through and getting our various different adjustments. So these would be our statements of retained earnings and how these would go through and look. Okay, so we prepared the journal entries, we did that, and then we prepared the prior period adjustment for the equipment error. We showed that basically this over here, and then we're going through and making those adjustments accordingly. So that is it for this particular lesson. I want to thank all of you for joining me. If you have any questions or comments, please feel free to leave them below. And again, appreciate you liking and subscribing. If you have any questions, please feel free to email me at ibc30tocpa@gmail.com. Have a great day.